All right, real estate stocks bore the brunt of the RBI rate hikes, with the BSE Realty Index plunging 4% in today's trade. This as real estate players fear RBI's rate hikes will hurt sentiment, especially in the low and middle income housing segment.
That's right, Vivek. In fact, to get more perspective on the real estate impact, we are now joined by Abhishek Lodha, the Managing Director of Lodha Developers. Abhishek, many thanks for joining us on CNBC TV 18. You know, rates at the EMIs at this point in time haven't actually been hiked, but the environment seems to be turning hawkish. How worried are you as a real estate developer?
I believe that, inflation is a growing worry in the environment, and in response to the inflation worries, the Reserve Bank is looking at using the monetary policy tools available to them to stem the runaway inflation, especially in food prices. The increase in the reverse repo rate on Friday is an indication of the same. We definitely believe that interest rates are on the way up over the next 6 months. However, currently from a real estate perspective, we believe that the market still has about 125 basis points worth of absorption capacity from today's levels in terms of an increase in interest rates, and hence we don't see that there will be a major problem in terms of demand offtake over the next 6 months, as long as interest rates don't increase beyond this 125 basis point level.
All right, Abhishek, the environment is also getting challenging. You've got the service tax levy, cost of construction is going up on account of steel and cement prices moving up. So how much more can we expect in way of a price hike at the consumer level?
Yeah, I believe, in general, real estate residential prices have been doing reasonably okay. But for the market to be sustainable, I don't think an increase, a year-on-year increase of over more than 15% is sustainable. You're right that on the input side, whether from the interest cost angle or from the cost of the raw materials, there is increasing pressure on input costs, and hence there will be an outcome eventually on the pricing. But given that there is a reasonable amount of supply in the market, I hope and expect that prices will not go up irrationally in response to these pressures. The service tax is the service tax burden on the purchasers is an additional burden, which is not really a part of the price quoted by the developer, but is an additional levy by the government, and that definitely will have a small negative impact on the purchasing power of consumers.
But let's talk about the stock markets now, Abhishek. The Realty Index at this point today down almost 4% on the back of the rate action that we saw over the weekend. There are concerns as to what will happen to the spate of real estate IPOs. You're one of the developers waiting for your IPO to hit the market. Do you see the change in the environment having a negative impact? Are you going to be delaying your plans?
Real estate is always, a high beta sector, both to interest rates as well as the overall economy. And right now, actually, interest rates and the overall economy are moving in opposite directions. So the economy is doing well and growing, so real estate should do well. However, there is a negative pressure with increasing interest rates. So there is some sort of a balance, and one really doesn't know where the balance will strike itself out. In terms of fundraising plans of developers, including ourselves, we are fully ready in terms of all our clearances to go public. But quite clearly, like you said, the realty market has had a bearish sentiment on the stock markets, and the last 2 or 3 listings haven't really done too well. So we as a company will wait and ensure that the market sentiment is right, so that investors can earn a whole lot of money when they invest in our IPO and don't want to go in any sort of a rush.
All right, thanks very much, Abhishek, for joining us there.